Alright, welcome to our weekly update on the Australian property market, where we discuss waves, impulsive waves and corrective waves around Australia. It looks like property bubbles are popping all around us. Some have already popped a while ago and now are limping along, waiting for another hurdle that will flatten the curve. I have a whole bunch of charts prepared for you to crunch, so if you like this content, give it a thumbs up and subscribe to the channel. Today we're going to focus on the UK and Ireland. So far we have discussed what's happening in China, Hong Kong, New Zealand, Canada and mainland Europe, which are going through last stages of this multi-decade bubble. There are literally one or two big spikes away from peaking, as interest rates are going to go backward again within days, based on the movement of the US 10-year bond yields. Once bond yields peak, we're going to see central banks coming up with elaborate stories how they were successful in lowering inflation, which we know from the previous episode is far from the truth. The lowering of rates is going to run for a while, as the US bond yields may go as low as 1.8% or even 1.285%. It's a slow process and may take more than 6 months. That is how long it may take for housing markets around the world to peak and finish off this huge cycle. Some claim it may go as far as 2025. What happens after that, you may ask? A slow and painful descent from the peak that will take decades, just like it has happened in Japan and Korea. But before we get there, let's see what's happening in the UK. First, let's look at the historic chart of the UK's housing, courtesy of the Fred. The cycle started after the Second World War, just like the rest of Europe, and remained relatively flat for a whopping 50 years. By the way, this is what the housing market should look like if you are not debasing your currency. Keep your banking sector regulated and only rely on modest immigration. Then in the third quarter of 1989, we had a short correction that lasted 3 years, which corresponded with Wave 2. After that, we started a huge Wave 3 that ended with the banking crisis of 2008, followed by another short correction, even shorter than Wave 2. It's interesting how much liquidity the Fed had to pump into the circulation in order to stop the global panic and secure the banking industry. If all Western housing markets ended up having such short and contained losses corresponding to Wave 4, it's a truly remarkable feat to stop defaults in multiple countries at the same time, whether it's Australia, Canada or the UK. So what happened after? We have started the final fifth wave that is still going higher as we speak. While the UK's housing index indicates we have reached the peak, we should look into the absolute numbers to find out what is actually happening on the ground and take inflation out of the picture. For that, we turn to real estate agencies to get a more accurate picture. Let's start with the national prices. As you can see, the chart starts in October 2018 at the broader corrective Wave 4. The first wave of the final fifth wave ended here. The second wave ended here. The third one extended all the way to October 2022. After a very short corrective Wave 4, we started and are in the middle of now the final wave of the final fifth wave. It is just warming up, and after this short correction we should expect a huge spike up corresponding to the third wave. Then another correction and the final set of fireworks that will conclude this festival of irrational exuberance. The same image is reflected in London's housing index. Here is the final, broader fifth wave, which is comprised of smaller Wave 1, Wave 2, and a significant Wave 3, followed by a shallow correction. We are about to start the third wave up within final fifth wave. After that, we're going to have only one more spike left, and that's it. From then on, we should start to worry and expect some huge news that will melt the credit market. Is it going to be a bank failure or a broader war, since there is plenty of wars going around now? There's a similar scenario over in Ireland, where we had a tremendous bubble back in 2008 relative to the size of their economy. Well, we thought we've reached the peak and that would be the end of their romance with properties, like it happened over in Italy and Spain, where the final fifth wave ended in 2008. The difference is, back in the south of Europe, their bubble started way earlier, probably due to the weaker currency and speculators from the rest of Europe investing in. Ireland, on the other hand, was much slower in blowing the bubble. That is, until big capital decided to run a creative taxation scheme and move their headquarters to Ireland. It set the fireworks under the Irish property market, which resulted in a huge spectacle that ended badly for the ordinary Irish, who struggled to make repayments on the huge loans. Here's Wave 1, Wave 2, Wave 3. Wave 3, as usual, ended in 2008. And now, after 6 years of drops, we are pumping the final fifth wave. Where are we in the final countdown? Very close. It's very hard to find a meaningful chart that show a price breakdown over the last year. We should probably observe what's taking place in the UK and use it as a proxy to determine the fate of the Irish housing bubble 2.0. We've gone past the previous highs, and like in all other countries, we are at the very end of the final wave. The writing is on the wall. Once we start descending, there is no way back up, no higher highs. What's more, since all these markets work in unison, it looks like they're all gonna blow up at the same time, which means a huge contagion that is going to affect the banking industry and credit market, since that is the major factor that drives these markets up. What's worth noting is that after spectacular spikes at the end of the cycle, you get a reversal and huge drops similar in size to the spikes recorded previously. In the final wave, you get a 20% gain. The market will give it back in an initial drop. But that remains to be seen, since governments are fixated on maintaining the illusion of wealth and intervene if there is any sign of weakness in the housing market. That is until governments are preoccupied with other activities. Time will tell, but it won't be long. Next time we're going to talk about the United States. Just wait for it. Meanwhile, stay calm and count waves.